Joining us in the ET Now studios, Madhusudan Kela. Nikunj, take it away for the chat.
Welcome to our ET Now special show, The Big Reset. And indeed, it is a big reset for the market from a macro and from a policy standpoint. So to discuss where markets are headed in the short term, medium term, but more importantly in the long term, today I have with me a very special guest, someone we've always looked up to, someone we know, but we've rarely seen him on Indian TV. Like the Bulls, I guess Madhusudan Kela also has been hibernating, but when Bulls are back, he's also back. So good to have you back. Thank you.
Thank you so much. Thank you so much.
We're interacting with you after almost a year, more than a year actually.
Maybe a year,
Maybe a year. So before we get into specifics, I just want to lay the land for our viewers as to where we stand. So this is what Madhu has happened to markets in last 3 years. And the comparative graphic of where Nifty versus the world is, I guess this is self-explanatory. Small and mid-cap stocks in last 3 years have been jumping in the same place.
Sure.
How would you describe the market?
I would say for smaller companies and specifically for companies which have debt of any nature, whether the company or the promoter, there has been an abnormal amount of wealth destruction. So I'll just give you one number. So we took companies, top 1100 companies, and we did that how many of these companies have fallen more than 50%. You will be surprised to know 50% of the companies out of 1100 companies have fallen more than 50% from 2018 highs. And the total value destruction in these 50% companies is 27 lakh crore rupees.
Big number.
Big, very, very large number, right? So obviously there has been a lot of wealth destruction in the smaller and mid-sized companies. And the basic characteristic of these companies' wealth destruction is A, misallocation of capital, B, wrong businesses, C, leverage. So these are the three characters you will find almost in all companies wherein stocks have fallen. Contrary to that, it is not that it's all gloom and doom. There are a lot of companies which have also appreciated in this time frame. The companies which are focused, they have no debt, there is no promoter issue, the corporate governance practices are very, very high. So you are seeing a lot of companies are even making a new high. But from an investor perspective, I would say there is a lot of pain in the small and mid-cap segment.
There you go, last 3 years which companies have done well. That data point is just
absolutely. And this is where someone like me is excited that so much has happened. Now, will there be a lot of companies from this fallen list are companies which are graduating, who have not been hurt, but they've been hurt more sentimentally. Like, Nikunj, I would just describe the market in 3 parts. One, holier than Dow. Basically, absolutely no problem, great companies, but very high valuations. I would find it very difficult to make money. Second are companies which are like, I call it coma mein chale gaye. Ab wahan pe koi hope nahi hai, basically. And that there are third companies in between, wherein, market perception is very bad, but reality is not as bad as what the market is perceiving them to be. Now, and so these are the companies which can go to any bracket, whether they can graduate and get into investable bracket, or they can slip and get into the bracket of untouchable. Now this is where I think there is an opportunity for an investor at this point of time to do bottom of work. And now these are times not to look at what happens to the stock, because we have seen this period so many. I've been here for 30 years. Yes. We have seen this period so many times in our life. These are not the times to buy something today and look at the stock after 1 month. Then you will only keep hearing stories of how people make wealth. You don't make wealth by taking a 1 month view. You make wealth by sticking your neck in these kind of times on companies or industries where you feel that the prospect is going to be very, very bright 3 to 5 years down the line. And this is where you make abnormal returns in equities.
It's fashionable to talk about bad news right now, but for a change, I'm going to talk about the good news.
Sure.
And the macros, Madhu, have never been good for us.
Absolutely.
Oil is benign, inflation is low, monsoon has been strong.
Sure.
A month ago, we had a lot of bad news. Now we have to hunt for bad news.
Sure.
But the screen is telling you that nobody is bothered about good macros and good valuations. Why is that?
It always happens. we have always seen that, it's like a pendulum. It is either in the extreme left or it is on the extreme right. Not long ago, in January of 2018, where the markets were, every mid-cap company was trading at 20, 25 times. So the excesses which got created in that 2017-18 period is now we are seeing the other extreme of excesses, which are getting created, and this is the nature of the market. So I don't think that you can ever have a market where there is some good news and it will get immediately reflected on the stock prices. The nature of the markets are not such, and which is where equity is very interesting, Nikunj. That today, as you rightly said, even if I have to give you 5 bad points of the market, I don't have trust me. I can give you 10 good points. And the most important point is that finally, at the end of the day, government is so supportive. They are doing all which they can do in terms of supporting various industries. You see, so much is being done for real estate sector, so much is being done for NBFC sector, so much is being done for banks, with recapitalization of bank. But effect of this will take a little while to come. It's not that you make an announcement and the fundamental effect will be there from tomorrow morning. And I am sure there will be many more measures from the government side, and one thing which I was watching very keenly, and let me just elaborate that for two. This is disinvestment, because at the end of the day, to do anything meaningful, even government needs resources. So what I am really watching for, that is there a strategic sale of at least a few companies which is happening. Because in India, we are in a very peculiar situation wherein the government balance sheet is very, very strong, but the P&L is weak.
Yeah.
There is absolutely there is no problem about the balance sheet. If the government really decides to use its balance sheet, there is absolutely no problem. All this fiscal deficit talk and all this, that can be a real thing of past. But if they decide to do it, and this time around they will really get some good value, because the companies are large, they are throwing a lot of money, and it is coming in a global backdrop. Then $15 trillion of asset bonds are trading in a negative yield. So if you have good assets, I'm very sure there will be a lot of buyers. So what I am really keenly watching for is that first real strategic disinvestment. Does it happen to a private party, whether it is a foreigner or a local company? And I think that will rekindle a lot of confidence among market players.
So no IOC and HPCL.
Yeah, I hope not. I hope not.
Okay. So the tax cut stopped the market from a fall.
Sure.
End of September.
Sure.
Can a strategic disinvestment, or even will the strategic disinvestment light the fire, and will that unleash the bull market?
I think so. I think that's the most important thing, because at the end of the day, see, government wants to do a lot of things, but they need resources. And where can the resources come from? And here's a simple math, Nikunj. What we did, let's say we take a budget of next 5 years. I think what the government has done, this 1,05,000 crore rupees is the disinvestment target for this year. If I take it for the next 5 years of this full term of the government, so the total disinvestment target will be something like 7 lakh crores. Even assuming that you are sticking to the fiscal deficit, and there is a roadmap of that fiscal deficit which has been prescribed for, maybe 6.5, 7 lakh crores. Now, even if you assume all companies will go below 51%, even to 26%, still then you can't make 7 lakh crore rupees of disinvestment through the natural route which has been followed by the disinvestment ministry till now. So the only choice, in my view, is strategic disinvestment.
Fair point.
And it has to happen. Okay. But the whole question is, how does this strategic disinvestment happen? Does it happen to a third independent foreign player, domestic player, or it happens among government companies?
That will be smoke and mirrors. That's absolutely not true disinvestment. Okay. So in cricket terminology, Madhu, we always say that depending on the pitch, you need to bat front foot or back foot. Looking at the macro, the current market level and valuations, a data point on valuations will also come in. Do you think a long-term investor now should take a risk and bat on the front foot?
Yeah. I would say yes, selectively you must take a risk. But, we have seen these days, Nikunj, there can be a lot of gap between the fundamental and the stock prices. So I would say that one needs to take a more systematic approach of not putting everything which you have, like everything which I have, I put it, and then I want that the markets will go up. I think maybe you can take a more systemic view over the next 3-4 months. Will be real good time to buy selective stocks. And I am saying you, we have seen time and again, it is not important to identify even an industry, forget market. Even in industry, you have seen such polarized performance even within the same industry. One stock is up 1000%, the other stock is down actually. So what is most important at this point of time? Can you really identify the winners of tomorrow? And then you stick your neck out and say that I'm a long-term investor here. I will bet on this company and I'll be with this company for next 3 to 5 years. And you and I have been in this game for long enough. We have seen how the reward comes of that level of conviction and that level of work which you do on bottom-up companies. And when you buy them in these kind of times when there is gloom and doom all around, obviously you are getting it at a more discounted price, then normally you will get it in a good market.
Okay, so I'm going to talk about a graphic which just captures the polarized nature of the market, and this is just for the benefit of our viewers. I'll get Madhu to comment on that graphic, which is that how select handful of stocks, you can count them on your fingertips, they are trading at disproportionate premium and the outperformance has been disproportionate, whether it's a Titan, Bajaj Finance, Reliance, HUL, Nestle, Kotak. These are large cap stocks, but the outperformance in last 3 years has been nothing short of breathtaking. Then you got a lot of NBFCs and a lot of other stocks which have been punished disproportionately, like Madhu said, because of 3 factors. How much more this polarized nature of the market will continue?
I think if you look at today, investors, specifically the institutional investors, are hiding in these companies. I would say, obviously, these are companies which are also benefiting because of what is happening. On a fundamental basis, these are companies which are benefiting out of what is happening in the marketplace. Because see, let us say if there are 30 banks and 25 of them have stopped lending. So the 5 banks which are lending money, they are able to choose the customer, they are able to dictate the rates. So the environment is very positive for them to grow. And also these tax cuts which happen will benefit some of these large companies a lot. So this performance is not in the air, in a thin air. Actually, the environment is very, very conducive for these companies to do well. And I think some of these companies may continue to do well. While I would say that the bracket 2, which is what we have identified, these are companies which are perception-wise fallen a lot. But the fundamental, there is not a problem, and you can find them in all industries. You can find them in NBFC, you can find them in pharma, you can find them in PSU basket, you can find them in even consumption. So I would say that this polarization will continue for some more time, till the time there is real clarity that we are really in a bull market, and all these worries which are being talked about in the market, that recedes. Till that time, investors will find it very, very convenient to continue to invest in these large cap companies. At least, see, हर शाने के लिए निकुंज, last 1 year mantra has been what? ये कमाने का टाइम नहीं है, ये बचाने का टाइम है. बराबर, क्योंकि जो बचा लिया कैपिटल, जिसने whoever has been able to save the capital in the last 1.5 years, he knows that ultimately I will turn out to be the winner because market will present me that opportunity. And people who have been very wise, I have not been that fortunate, that people have been very wise who have actually invested in this large company in the last 1.5 years. Not only they have protected their capital, but have been also been able to make money in these markets.
So I have 2 follow-up questions for you, and this is for Madhu Kela, someone who's seen market for 30 years. When did you see a similar kind of a market in last 30 years?
This level of wealth distraction I have not seen.
Even in 2008,
no,
you would say?
Not at all. I think 2008, see, the question was, in 2008, we were convinced that the markets are bad, but economy was not in this kind of a shape. Wherein, this time around, there is, नजर हटी के दुर्घटना घटी कि आपने कुछ भी थोड़ा भी गलती किया, you can lose your entire capital. मतलब I have not seen, I will send you the list. There are at least 100 companies out of that list which have fallen more than 95% from 2018 highs. 100 companies. So I have not seen this level of wealth distraction. And some of them are not necessarily bad businesses or bad management. It is just they are caught They caught in the leverage, promoters have got leverage, they could not get refinance, so their shares got sold. The businesses have got leverage and they could not find refinance in the business itself, so business got into a cycle. And third, our category where they had to receive a lot of money from the government. And now if the government is not paying them the money, how do you pay to the banks? So this time around the cycle has been very, very vicious, I would say. And there is a humongous amount of wealth destruction.
Can it get really bad? Can it really get worse before it gets better for the economy and for the markets?
I think that possibility is always there. But my hunch is also the level of pessimism which is around today, Nikunj. Anyone you meet, people are so nervous and so pessimistic that my gut tells me that I've not seen it before, and obviously all that pessimism, all that fear is reflected in the stock prices. So if you're telling me to bet today, I'll bet on more optimism rather than pessimism. I will bet that things will improve from here rather they will deteriorate. So it will take time. Let's not forget this level of wealth destruction which has happened. Like if a patient goes to in ICU, he doesn't start running even after getting cured. So there's a process of he coming out into the room, then gradually start walking. So markets are going to be like that only. So I don't expect that there will be fireworks, but things will start to stabilize. And what I'm hearing from all my friends, that October month actually has been good for a lot of companies, at least since the beginning. And the government has also started releasing funds from 15th September to a lot of sectors and companies, and the payment which was stuck and which was not coming. I think some release of that money has started.
Okay. Madhu, what I've always admired about you is your ability to take risk and understand which promoters can create a lot of wealth. You bought classic great promoters in the past. But some of the risk takers in the last 5 years, they've got badly bashed.
Absolutely.
Whether it was capital allocation or whether it was the ability to scale up by taking too much of risk.
Absolutely.
How should a risk taker really look at what is happening in India right now?
So I would say, Nikunj, last 2 years has been tremendous learning from my personal perspective also. I think I made a few unpardonable mistakes because after being in the market for so long, one is not expected to make that level of mistake. But this time around it was too vicious. It didn't give us time to react. And in some of these mid-cap companies, it is very easy to enter.
Where did you go wrong in assuming, understanding the trend or understanding the earnings?
I would say one underestimated the promoter leverage and once in few cases. And in a few cases, it's just that, we had excessive faith on select companies, select businesses, select management. While it was writing was clear on the wall, it's still being
so emotional about it.
Yeah, absolutely. And that is one message which I would like to give it to all your viewers. You have to keep business separate and your emotions separate. It's very important to have a good relationship. But ghoda ghaas se dosti nahi kar sakte. Investing in business and family should be kept separate. Absolutely.
That's a great learning point coming from someone who spent 30 years in this.
Absolutely. And I must say I with humility, I must say that obviously there is a whole road ahead of us. Let's not forget the optimistic side of India. We will see $10 trillion hopefully in our lifetime only. So what has happened in last 5,000 years, there is much more excitement ahead over the next 20 years. And these times, in that time frame is a very small time, like 1 or 2 years of this pain is not a big time. I hope we emerge as stronger investors, better investors, and don't commit the mistakes which we did.
No, I'm sure. Learning is always a continuous process. So one works with the assumption the big picture is intact for India. What we debate on a daily basis on various forums is that whether GDP is 5, 6, 5 or 4. We don't debate whether India is growing or not. India is still growing.
That's right.
Companies will become bigger. So if India has to indeed become a $5 trillion economy, it could become in 22 or 23. That's the only debate we have.
That's right.
Which companies, which sectors will do the heavy lifting?
Again, This will be typical, the same financial services, the same IT services. I would say from an investor perspective, Nikun, it is, I'm sorry to be stereotype and repeating the same thing. It is important to identify that winner company. And maybe some of the characteristics have changed.
Some hint?
Like, I would say the first thing which you look in a new entrepreneur, is he really adhering to the new corporate governance standards which the markets are prescribing for? All these companies which you showed me, apart from having a good business model, we can really bet on them that their corporate governance practices are at the highest level. Second is allocation of capital, whether they are really prudent about allocation of capital. Third is the kind of organization and the team which you have built. So let me put it like this, Indian population has grown from 120 crores to 130 crores in the last 5-7 years, right? The number of people in the companies which were serving any industry, in my opinion, between 30 to 70% of those companies are out of the business, depending on which industry you're talking about. That effectively means the remaining players would have to serve this larger India opportunity, because India opportunity has not fallen. It is not that the GDP has fallen from $2.8 trillion to $2.2 trillion and the whole opportunity has shrunk. So as you rightly said, that the opportunity is still increasing, whether it is 4%, 5%, 6%, and the competition has receded. So it will be an absolutely delightful time to pick up those companies which are going to make it over the next 5 to 10 years, and I am very convinced that this will be there in all sectors. It will be there on a bottom-up basis, and the investors who have the perseverance and the patience and to stick to these companies will turn out to be a big winner.
What are your current commitment levels? Are you sitting on very large cash, or you think now it's time to really take that risk in your personal capacity?
I am sitting on some cash, to be honest with you, and have been very defensive in the last 6-9 months. You asked me that why you didn't come in TV. Those तेजी लगता नहीं था और मंदी बोलने को होता नहीं है.
अब तेजी लग रहा है.
अब लग रहा है.
The fact that your back is an investment that you think better days
अब लग रहा है यहाँ पे कि मेरे को लगता है कि टाइम लगेगा इस बार, but opportunity बड़ी है.
Okay. You said that buy sectors which have got disproportionately challenged. NBFCs, real estate, hotels, everything has seen what could be called as a churn.
Sure.
So can I say that one should simply stick to market leaders, let's say in NBFC, in the real estate, or in the aviation space, because these are 2-3 sectors where churn has happened. Jet has gone under, a lot of NBFCs have gone under, a lot of HFCs have gone under.
So at this point of time, first list, you need not be very adventurous, because even a lot of good companies have fallen. So I don't want to name. So let's say, for instance, in the pharma sector, there are a lot of challenges. Even a lot of good companies are going through the regulatory challenges, but so have the valuations collapsed. So at this point of time, do you need to be extraordinarily brave and say that I want to go for highest return? No. First of all, will you make some money? Will you preserve your capital, and will you make some money? So you don't have to be extraordinarily brave is what I'm trying to tell you. Let the market consolidate, let it recover a little bit. Then there will still be a plenty of time to buy the risky companies. But right now you have enough choices in each sector not to even buy risky companies and still make money. But my pick will not be these expensive names. Can I go and buy a finance company at 6-7 times book value? It will make money, as I said, but that's not my bet. So I would much rather bet on a company which I feel will survive through this bear phase, and hopefully in the next 3 to 5 years time keep my capital intact and make me some superior return.
So I want to go back to that graphic once again where we talked about 3-year changes. In the last 3 years, large caps have outperformed. But like you said, that don't focus on what has happened in the past, focus on what could happen in the future. In the future, and if I'm looking at this graphic 3 years from now, can I say these 2 red bars will become big, tall green bars? Mid and small caps will outperform.
I bet.
On that. Why do you say that?
I bet
is a big word.
Yeah, I bet. I am saying, that this is, we can put our conviction.
No, of course.
What my point is that, this is where maximum amount of distraction has happened. And also you see there are regulatory changes that happen, what mutual fund can do, how the composition will be like. So this is where, and within this, let me tell you, there is one sweet spot that over the next 5 years, you will see a lot of these small and mid-cap companies change management hands. So there will be strategic value which will come in some of these small and mid-cap companies. So let's say, supposing if you are a small company which was available today at $25 per ton of cement, while still the big boys are trading at $150. And what happens if that company is willing to sell?
Somebody will buy it.
Somebody will buy it. He may not pay $150, but he will pay $100.
Yeah.
If he pays $100, you have